Hey team, good afternoon. Happy Monday. I'm going to give you the little extra bonus video today. I'm going to go over my Square, my SQ case study on how I went from a true disaster to a pretty nice winner. So I'm going to go through it. I'm going to go in detail, but I'm going to go pretty fast because it can get really we could get lost in the weeds and everything. So I have a spreadsheet of all the transactions. I'm going to go through them, and then little by little, I'll show you what day within the chart, it happened. Today, huge update on a Square. I was able to take advantage of it. So all these little moves here were able to be, helpful for me. But I'm gonna go through all that so you guys can see where you can start out. When you have options, when you sell premium, it can get bad really quickly if your timing is off. But then, like I always tell you guys, I have a lot of tools in my toolbox, and there's ways to manage things. So I was able to manage my way out of it. Um, Please, by no means am I boasting anything. I'm very blessed. I feel very grateful that I was able to get out of it. And it was like 80% luck, 20% skill. So it's not like it was all me. The market cooperated. I feel extremely blessed to be able to I'm grateful to be able to get out of it. So in no way am I, doing anything other than just being humble about having the opportunity to be able to do it. I want to show you guys and give you the confidence that when you're in a bad trade and you're trading options and you're selling premium, it's not all lost. You can recoup and you can get back in the game. It takes patience. It takes a lot of maneuvering, but there's ways to do it. I want to show you. Also, your psyche gets really messed up because I'm going to show you. I was really my confidence got really shot, but then I kind of just said, you know what? There's ways for me to get out of this, and then I can't just give up. Obviously, I'm gonna fight through this and get myself out of it. And at the end, it was very rewarding. So I'm gonna go through that real quick. Again, this is just a little lesson on how trading can go bad for you, but then if you stick with it, you don't quit, and you do the right moves, and you get lucky, also, you can get yourself out of trouble if you're trading options and you're selling premium, like I like to do when the market is very volatile. Real quick before I get started with it, though, I wanted to show you just the market real quick today. I mean, huge update. It was a continuation from end of the day Friday when I told you guys that hopefully we have a little seasonality move here. We ride the 200 if you could see here. So tomorrow is turnaround Tuesday, so I don't know if we're gonna have a little pullback. That's why I took a lot of profits today. But I still have enough that if we continue, I'm gonna be able to participate. And like I was showing you here on the channel, we finally broke above here. Now we have this little upward channel here going on. So, we still have we can still go a little bit higher before we pull back a little bit, and hopefully we stay within, this channel going up, and we continue this a little bit higher. So, this was the initial bigger channel that we were in upwards. We broke it downward, and then, today we gapped up, and then we just kind of grinded higher. Huge volume in the last bar, which is extremely positive. So that's the market. So let's get to it. So I'm gonna all right, here we go. This was my initial trade on SQ. Okay, my initial trade on 315. I put in the 21 contracts on the 135. Here it is. Here is when I did this. Let me get on 315. This day right here. This day right here, 315. This huge update here back in 315. I went ahead and sold the 135, which was up here somewhere. And obviously, look what happened. I had 1, 2, 3 huge days up in a row that I got completely destroyed. So let me go back over here. So I was down, guys. I started with this position within, you know, 3 days later. 3 days later, I was down $20,000 in this position. $20,000 in 3 days. I mean, that's devastating. I was like, okay, what am I gonna do here? I was telling you guys I have a huge drawdown. You know, but I'm gonna get out of this. So here's kind of what I started doing. When I first got an opportunity, I went ahead and sold some puts that I was telling you guys. I was selling puts to finance my rolling up on the short call. So I started with a 135 short call, then I sold the 115. I got some credit that financed this move that I was able to roll up 2 weeks later to the 140. So now I got myself a little bit of, you know, $5 more of room on my 21 contracts. Then I went ahead and now my new cost basis became this. Okay, I was still down, you know, about 20 grand, but I was able to at least reduce 5 points of risk because I went from 135 to 140, and as you could tell, obviously this was going, you know, parabolic all the way up to here in the 140s. So I gave myself a little bit of room here, and I still had the 150. Again, this has never hit 150, but still, you know, I had 21 contracts. I was down 20 grand. I had to do something about this. So then I went ahead and rolled the puts because it kept going higher. I rolled the puts from the 115 to the 117. I picked up a little bit more credit, and that helped me to finance the roll up from now to the 140 to the May 150, which is the ones that I had for a while, all the way up to this month, the May 150. So I was able to again give myself a little bit more room. I picked up a little bit of credit, and now my drawdown went down, you know, about 3 grand. So I'm improving. About a week and a half later. Okay. Then I continue to roll up my puts and roll out. So I'm picking up more credits on the put side. Again, when you have a short call, which is what I started with, 21 short calls on the 135. When you have short calls, let me when you have short calls here, short, anything you add in the bottom, any short puts you sell, do not require any more margin. So whatever your original margin requirement is on your initial transaction on the short calls, anything you add in the bottom, it's free. There's no margin. It's free as far as margin requirement because you can't get hit on both sides. This can only go up or down. It can't do the same thing on both sides, obviously, right? You guys get that. So if it's going up, and I keep telling you guys, my pain is here. My pain is here in the 150. These guys right here that I'm selling do not require any more margin. So you could construct yourself into a strangle instead of having just a short vertical. Now you start selling here to finance any activity here to keep yourself keeping safe going up. So that's something you have to know. Okay, so again, I keep selling puts, right? I keep selling puts here and rolling up on my put side and keep getting credits. Okay, and then on the 25th, which is 25th is this day right here. On this day right here, when we had this 3 days down in a row, and I got lucky that I was able to reduce some pain up here. On this down day, I was able to close out 6 of the ones that were here to kind of reduce my my exposure a little bit. Okay, so I did that, and now my new basis became 637 with the reduction in the price of the stock, and now I'm only down 12 from the original 20. Still down 12 grand, but again, it's 8 grand better. So now I went ahead and closed these puts right here on the 29th to be able to pick up. Let me see here, the 29th. The 29th is this day right here. So right there, that day. Let me clean this up. The 29th is right there. Why? Because we had 2 big up days. Right? So now these puts that are over here become less valuable. So I'm able to close them out at a profit. So now I'm rolling all these profits into my overall position to further and further and further reduce my my drawdown. Okay, so I mean there's a lot of activity here, if you could tell, all these transactions. So then again, now I have a new basis. Now I'm down to 7. Then I ended up closing these puts, and then I have a new base. I still have now 15 of the May, so I went ahead and closed these puts here for a profit on the same 29th. I started basically adding a little more. Now I sold on the 29th the 160 short call for 205. I just sold 5 of them, not on my May 20 set, but just to keep on adding more credit. And I basically picked up another $1,000 because I sold 5 times 2 is 1,000, right? 500 times 2, it's 1,000. So I picked up $1,000 here to again keep financing my overall position, keep generating profits in where I can as the market allows himself. If the market goes up, then my bottom side it's profitable. If the market goes down, then my top side becomes profitable. So I keep going back and forth to squeezing out profits, taking out, cashing out any profits I can to reduce the exposure on the overall position, and then continually and draw down my reduce my drawdown. Here I took a little bit of a hit, kind of went up a little bit because since it went up on me, I was able to sell these. But now by me selling this, obviously the market went up. My pain scenario on the 150s is a little bit hurting, so I'm a little bit further down on my drawdown. Again, it's still 50% down from where I started, so that's good. Now, on the 30th, I was able to sell 35 of the 125 puts because again the market was so high, and I was able to pick up short-term basis. If you notice, it's 1 week away, just basically another 4 or 5 grand that I picked up here, again, just to further reduce, hence lowering down my cost basis on my drawdown. Now, on the same 30th, I was able to close out another of the 150. Here's the 30th. Let me see. The 30th is here. This next day right here, right? Since it went down, remember the 160 I sold the very previous day? Now these guys are profitable, so I'm taking profits here. And since they were only for April 8th, the theta decay is so much greater. I was able to take a big gain on these guys right here, and then sell the 125 as it was going down. This premium was rising, and I was able to pick up a lot more premium on this day. Again, just managing it day to day, taking opportunity as the market presented itself to further and further reduce my drawdown. And then it seems like it's a lot of work, but it really isn't. I'm looking at it. I'm seeing, okay, where can I get more credits to further reduce this? And okay, I just keep going back and forth as the we have a big 8, 9, 10 point up day. Now my puts are profitable. The next 3 or 4 days we have 4, 5, 6, and 7 points down. Then my top side is profitable, and I get to close those out. So again, I went ahead and then the next day I rolled from the April 8th to the 125 to the 120s, and then I picked up another $1. So that's another $1,000 that I picked up on that, and then now I have my new cost basis. And then on the 1st, I was able to close. Basically, I'm all out of the 150 calls, which is on the 4-1. So 4-1. 4-1 is here, and this day right here, which is on Friday. That's where I lure you guys. Here, let me clean this up. On Friday, right here, since we had a down day, these guys lost value, right? So I'm able to close them out and finally get away from my pain area, which I think I posted on the feed, that I am out of my pain, which is my top side is my pain. This right here, I'm okay with this because I can keep rolling this, but in all theory, this can go to infinity, and then I'm screwed forever rolling this. So On the bottom side, yeah, I can go to 0, but again, it's not gonna go to 0. So I had the 125. So I wanted to close this pain area out. So I was finally out on Friday, which that was a blessing. And then I had a new basis now because I closed these guys out. I paid for it. Okay, I paid for it. So now I have a new cost basis. So I was still had a little bit of a drawdown, right? So on today, this morning, I said since we had where is it? Back over here. Since we had this huge update today, 11 point, I sold the 165, which is right here when it was, kind of going up towards the end of the day. Since the volatility went from like almost 19, 20 to like 18, it dropped almost a point and a half. The VIX, these options crushed it's called volatility crush, when the option price shrinks because of the volatility. So when I sold it, the volatility was high. When I closed it at the end of the day, the volatility had come in, so I was able to even generate a little bit more profit on this side. And then my 120, since we had a huge update, they were ridiculously profitable. And then that's why I was able to eventually close out my overall strangle for a total price at 311, netting me back from 315 being down $20,000, ended up on a profitable on the position $3,100. And here is I know you guys believe me, but here's proof. Okay, my P&L year to date on my Thinkorswim Ameritrade. Here's Square block. This was today. This is my gain today on this because of the movement that it had. I was able to generate a lot of profit on the put side because it went up so much. This was mainly my puts. Here we go. There it is. $3,200 on the year, which is basically the transaction. I have $3,180 because of commissions. The difference is basically commissions. Okay, so here it is. From down, let me get this out of here. Guys, from down 20,000 to up 3,000. That's the beauty of options. That's why I love selling premium, because yeah, it can get you in trouble if you don't know what you're doing. And it can get you in trouble even if you know what you're doing. I mean, it got me. I mean, look at this. This thing right here was parabolic, and I got caught up in this. I got caught up in all this right here, and I was hurting, but in the tune of $20,000. So again, it went, if you look at it in all essence, what I always tell you guys, when you have a parabolic move like this, it's not sustainable. It really isn't sustainable. So yeah, this sucker didn't go down, but what did it do? It went sideways. It digested this move. Okay, like what happened here. It went up parabolically, it went down. It went up here parabolically, it went down. Here it went ridiculously parabolically, but here is showing a lot more strength, and it digested it. So in this consolidation right here, I was able to maneuver myself within the up days, within the down days, to sell, buy, close, and do whatever I could to be able to get out of my huge drawdown and come up with a pretty nice size profitable trade within a month. Okay, so just to show you that even if you're down, and even if you're down big in options, now if you have shares, there's nothing you could do. I mean, if you have shares, obviously I wouldn't have even done all this. If I had shares, obviously I wouldn't have shorted on shares. But let's say I have shares and I bought it at, this breakout right here. Let's say I bought it at 270, and then it breaks to 50, and it's down here. I'm out at 230. That's it. I don't go through this that I have to now maneuver and get myself back. I would not. This will never happen. I will get out. I have a stop loss below the 50. That's like a rule 100%. So this would never happen. As far as in shares, I'm talking about options. I'm talking about when you're selling options, that you're selling premium. They're handled a little bit differently because you have yourself a cushion of the strike price. I mean, I had the 150. In theory, the 150 has never been hit. It has never gotten to the 150. But I don't want to take that risk. I'd rather get out, make my $3,000. I don't want to hold it for another like $6,000 that I could have possibly made. I don't care. I'm very blessed that I was able to get out. But what I'm trying to get the point across is when you sell premium and you get in trouble right away, don't panic. There's ways to get out of it, especially the way I do it, which I do it naked. If you do it on a spread, it's a little bit harder. I will be honest. That's why I've said it in previous videos. If you sell a spread because you don't have margin, it's a little bit harder to manage. If you just do it naked, just the one, then yeah, then you could do everything I just finished showing you that I did in the spreadsheet, and it's a little bit more conducive to making these rolls and getting these credits without having to roll the vertical, the two positions rather than the one position. But again, my point here is, if you get in trouble when you're selling premium, don't panic. There's ways to get out of it. There's a lot of tools in the options world that you can maneuver yourself and get yourself out of trouble. So always be confident in trading. Be a confident trader. Learn from mistakes. My mistake was I went too heavy too quick. That was my mistake. I kept adding and adding and adding and adding, where I should have just kept myself at 5 contracts, not 21 contracts, and been down 20 grand by the end of this day. That was a mistake on my part. Okay, so I learned from that mistake, and now if you notice, what I was trying to do is I was trying to reduce. So I bought 6 back as soon as possible. Then I bought another 10 back. So I was able to. I was trying to reduce the exposure as much as I could to get myself out of trouble, and at the same time, generating credits and premium to offset the drawdown from these guys when I was able to be able to then close it out altogether. Okay, so case study on SQ from a huge loser to a very pretty decent size win within a month basically. So just have confidence. This is for the long term. Just keep at it. Okay. I hope this teaches you guys something, at least to have to be confident that you can get out of positions when you're selling premium and maneuver your way out of trouble as best as possible with a little bit of luck with the market helping you out. Thanks, guys.